Well, good day, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up for the weekend of June 16th, 2023, Father's Day weekend. So let me start off by wishing one and all happy Father's Day. Remember, it's Juneteenth, which means you're not open in SPDR's stocks, ETFs, on Monday. You resume trade on Tuesday, so you get a break. Let me tell you an epiphany that I was having today. You know, I look at these markets and I'm looking at the melt-up going on in these charts and I'm going, how do you get involved in them? Not negative. How do you get involved in them? And then you start thinking about the markets and you're going, what, blah, blah, blah. Let me tell you the noise that comes in. I'm human like everybody else. If you're a chartist, you're a chartist. Stop thinking about the market. Look at the chart. Does the chart say buy or sell? If you're not within my version of what's called an embedded reading, that's one set of risk factor. And the other is, where are you wrong on a normal buy-sell mode? I forget that. You forget it. You got to come back to it. Because if you do, you throw the name off the chart and you go, okay, here's a chart. The market's in a melt-up. Do I want to get involved? Where am I wrong? And if you can't find an area there, and most times you can't, that makes sense, and most time it won't, you either were in the trade or you weren't. It's that simple. And when a trade picks up and runs, and it's rare, but it happens, and when it happens, it's not in the whole market typically, it's in a very few sector. And that's what happened. We have seen this going on where 7 stocks, sometimes up to 10, are carrying the stock indices. And because of that, we all say, look at the market. Well, if you take them out, and there are services that do that, and you look where the market's at, it's not quite what you think it is. That's not the issue. The issue is the index runs with those in it. And if you're trading the indices, that's what you trade. And if not, you're doing it the other way. I, for one, believe that some of the stuff got away, and that's life. There'll be other opportunities. They come around. Be ready for them. Don't cry about it. You didn't miss anything. If you come in here, I'll give you an example. If you're buying a video, tell me where your stop is. Buy socks. Tell me where your stop is. I mean, we'll get to these. You're going to see. So let's go and just take a look. Remember, these are the weekly, not the daily charts. Ford came alive because it jumped on the Tesla bandwagon. It solved part of its problem with what about chargers? I got all these cars I want to build. How are they going to get done? And smartly, they said, I don't have the money to go out and build thousands of charging stations. Now, what nobody seems to understand is there will be the private sector that steps in other ways and puts charging stations up. They'll find a way to make them more affordable. That will take the volume of cars on the road to make it financially feasible. And then, like everything else, technology will get to be to the point where this makes sense. China's way ahead. In some areas, you have a charging station. In other areas, you drive your car. It looks like a pod. Think of a container, a trailer container on the ground. You pull in, robots come out. They take the battery from under the car, robots, no human beings. They swap it, they put the new one in, and within 5 minutes, you're out of there. It's a version of what Israel had years ago. They've made a better version of it right now, and away they go. Will it become, in America, a standard? I don't know. It's another way of doing it. Right now, what happened is the standard was set, and I'm mentioning all this since we're on Ford, the standard was set that device that goes into the car, GM and Ford are going with the Tesla standard. Guess what? Stellantis, everybody that sells in America, every car that's going to be sold electric is going to adopt that over time. They're going to tell me they're going to see all these stations and they can't use them? Think of the big American automakers. We're not going to do this in America for the Mercedes. They're going to have to adopt, okay? Unless Mercedes wants to build its charging network. That's what's going to happen. So Tesla wins because the big two in America went that direction. And if you want to compete in America, all you got to do, be it I'm just mentioning Mercedes, it could be a Citroen, it doesn't matter what it is. They'll make an adapter that you can put on, and it'll work at these type of stations. You're not going to have a choice, because that's going to be, once you get these three manufacturers together, if I'm throwing money at a charging station, those are the cars that I'm going after, and I think you'd agree. So it really lifted this market because a problem solved. The second thing, let's go to chart action now and forget about problems. You have a pattern of a lower low and a higher high. That is not a buy, nor is it a sell. The market was underneath and fighting at the 200-week moving average of closes over and over. I know what I would say if that was it. I'd be saying, hey, folks, it doesn't want to get under that. Being short there doesn't make sense. It's just not acting like it wants to go. And if we add the next chart, it was oversold during that whole time. Proof of the matter, let me take you there and you tell me what you see. You didn't make it to the Bollinger Band, but this was the number. I wish I would have been smart enough to say, oh, you got to go long. I didn't have a buy signal. I had a reason not to be short. There's a huge difference. And throw the name off the chart. If you do that, your life changes in chart analysis. Don't get caught up in the company. I'm telling you, I had an epiphany today. I was thinking, what's frustrating me? Because I was frustrated all week. I was frustrated because I don't believe in going through FOMC meetings. So I knew that I was going to have a shortened trade week to begin with. And I'm looking at this melt-up going on here and going, what? How did I miss things? Blah, blah, blah. I didn't miss too much. I'm looking at the market and going, okay, I can see that now. Let me come back here. My mistake. I apologize. The market comes up. If you take out that high, you're no longer in the bear camp, no longer in it. Okay, now I don't have a buy or a sell signal. First resistance, logically, would be the Bollinger Band. You get through it if it can stay over it. If, and I don't know, only 5% of the time do you. Remember that. The next moving average, and there doesn't have to be one there, is the 100 at 1458. As far as I'm concerned, that's where you're at. You own it. I don't want to buy it up there. There'll be better opportunities. If it's not that, it'll be something else. Schwab, this is a bear market rally and no more than that. Now, you're correcting an oversold condition, but you're underneath the 200-day average, the 18, and you've been that for a long time. It's not like you see in Ford where it held it. Now it's got to prove it can get over it. A whole different thing. A problem for the market. Now, are you watching the 210 yield? That's another problem in that yields are going higher. So if you want the logic of it, the logic is that if yields go higher, Schwab, to keep client balances cash, has to pay more to them. You see the interactive broker as they compete with them and they mention them. We pay this, they pay that. Okay. So I can see that. I'm looking for a trade signal, but on a weekly chart, I don't have one. I have a reason not to be short, no reason to be long. KRE, this is a bear market rally. You lost the embedded reading. I teach that normally when that happens, before you make it to this low, you make a run. Doesn't mean you have to hit it. You make a run to the closest main moving average, which in this case is the 18-day, and you did the same, and for all purposes, you're there. In the KBE. You had an embedded reading, you're done. The end of a bear cycle, not the beginning of a bull cycle at this point in time. So I go to the industrial sector. I want to remove this week's number. It tells you the story. Do you think you're trending up or down or just drifting sideways in this market? You have been hitting the 18-week average since March, almost every single week. So you're in the middle of no man's land is the way that I look at it. If the market rallies, the top side resistance is the upper band. If it breaks, the bottom is the lower Bollinger Band. Eventually, you're going to break out one way or the other. I'm fully aware of it. I'm looking at momentum. It's up. The bias is up, but I don't have a trend in the sense that I don't have a pattern of higher lows, higher highs. The chart isn't offering that. Here's the market up and over the Bollinger Band. What are the odds of the market staying over the Bollinger Band? If you and I step back, not very good. Under it, you generally get a bounce away from it. But in sideways action like you have here, sideways eventually has to set a market to saying it broke out and it's going to stay broken out. My mind's open to the fact that it may want to do that. But it has to prove to me it can, and it's overbought. There's the chart analysis. In energy, forget Saudi Arabia. Throw the name off the chart. Please do that. You have a market that's got momentum that's flat. You have a pattern of a lower low, higher high, and you're battling for direction at the 18-day average. If you can close this week over 82.13 and take out in the process 82.52, you in theory could end up with higher lows, higher highs, and be over that number for the first time for a buy. Is there anything here that can do a sell? None. Even if you just drop, you have a higher high and lower low. When I look at FXE, is there a new trend that's here? There isn't. You have a market that's gone from the upper Bollinger Band and a challenge for the first time of the 100-day average in a very long period of time, dropped back, and now it got over it. Okay, I'm open to the idea that it's trying to get over that. I'd love to see a crossover if I'm going to get bullish of the 18-week, get over the green 100, but I don't have it. I don't have anything to do right here. Could this market turn bearish again? Yes. How? If you take out this week's low and close lower on the week, I could end up with lower highs, lower lows are in place. Can anything here turn super bullish? No. Doesn't mean you can't go higher, but no, you can't get a new higher high, higher low unless you have an outside week to the upside. In the gold market, real interesting. You're at a key number, and from here is going to develop a trend now. You're at neutral territory. You're at ground zero. If the market takes out 184.21 and doesn't make new lows on this, you can end up with higher lows, higher high. If the market takes out 180.09 and doesn't go up for this number, you already have lower highs, lower lows, close under 181.23. I get bearish. Got a game plan. GDX, right there with it. Get up and over the 200-day average. I'm interested. I could have higher lows, higher highs, bullish. Get under 30.11. I've already got the lower high, lower low. Then this all becomes serious resistance, and the market opens the door for lower 26.61. In Tesla, Tesla's a breakout. You closed at the top part of the range last week. Let me take you there. Top quadrant. Right into the first resistance point. First time over the Bollinger Band. Overbought. This week, let me now take you there. This week, you do it again. That's 2 weeks in a row. Until this low is taken out, the most recent low, until that happens, this market's in a breakout territory the way that I chart. I would never tell a client to buy over a Bollinger Band, but I'm frothing to buy the market on pullbacks into this zone. Will it come there $60 lower? Who the heck knows? But it won't be 60. This moving average is going to jump. You can see that if I start right here. Look how much is jumping each week. 193 to 190 to 187, about $3 a week. I'm just saying, got time. I'll wait my turn. AMC, just not going anywhere. It's sideways action. It's summertime. This is when the revenue should come in. The kids just got out of school. The big blockbusters are now. If it can't do anything from here, I'd be very nervous about this. If it starts breaking out on the downside, this is a stock that can go broke. It needs to get over the upper band and prove it can do something to the upside. What about when it went to $30 and all those people were buying their debt? I mean, I kept saying, don't do that. Only because I know that business to a degree. Apple. Okay, so Apple's got the embedded reading. Until it loses it, the market is a buy on pullbacks according to the rules in the Enhanced Bollinger Band course. Go to iraepstein.com, education. The course is right there for you. Get the red line under 79. I don't want you to be long anymore. Don't get it under there. The market is a buy on breaks, objective upper Bollinger Band. But pay attention to the rules in the course. Google. Okay, so here's Google. The first moves over the 100-week average. If it cannot stay there indefinitely, and that doesn't become support. You're at about at the time frame where it's got to make a decision. What is it? Each week that goes by, the 18-day average is going to climb towards that. Will they come together, or will it be what I call a kiss, where it comes up and you drop? We're at a key number. The market has been running the upper Bollinger Band and waiting. Now, it turns bullish if this week you take out this week's high, which was 126.58, and you don't lose the bullish embedded reading by closing under 79. That's how I'll look at the market. That's it, I guess. So when I look at all this, you try to put it together. Now, I'm throwing a lot of technical terms at you. They're easy. I only use 5 indicators. I explain them all in detail through the Guide to Technical Indicators created with my good friends at Futures Magazine. Give them all the credit for it. And it explains all this, all the different types, graphs with it, pictures to show how to work with it, what's going on. Great explanation, and we help you tie it all together. Today in the hog market, of all things, I was sitting there talking, what was it, the Fibonacci numbers, and I was showing a 50% retracement that had taken place. I do that on the charts. The name of the chart doesn't matter if you're a chartist. It's the pattern. If you're a fundamental trader, trade the fundamentals. If you're a chartist, trade that. People try to blend. I find that blending gets you into more trouble than good. I'm Ira Epstein. You go to our website for free offers. This is there. Just choose what you want. You can move your cursor up here. It'll take you right to that section. You can always call us. You have a great holiday. I will catch everybody on Tuesday morning.